I would say on the secondary side, it's a very topical discussion for two reasons. One, Japanese institutions, particularly financial institutions, I think are considering secondaries as a tool to rebalance their portfolios and as an additional source of liquidity. And many institutions, because of what's going on from a regulatory standpoint, are actually considering secondaries for the first time. Secondaries is also being looked at from Japanese investors as an investment opportunity, and particularly some of the pensions that we deal with have shown interest, particularly given some of the features of secondaries as a strategy, which tends to mitigate what they call the J curve, and provides diversification and has attractive returns historically as an asset class. Given what happened during the global financial crisis and the need for liquidity, I think people realize how illiquid private equity can be. Having said that, the secondaries market is an option to create liquidity, but again, it depends on what your needs are. I would say that those who sold right after the global financial crisis were probably distressed in some nature and really needed to raise cash. But I think most of the institutions today in Japan that are looking at it really more as a rebalancing tool. Again, they see attractive strategies, but they don't have enough cash, so they're going to liquidate some of their funds in the secondary market and redeploy that cash to strategies that are more attractive in today's market. Well, I think Japanese pensions, first of all, are looking for investments that have high yield, because there aren't that many investment opportunities in Japan locally. I think the Japanese government bond only yields around 2%. So it's very hard to find something that has a high yield attached to it. Private equity as an asset class has shown equity-like returns in the past, and secondaries is something that is attractive to Japanese investors because again, it mitigates the J curve. It also provides faster distributions, and it does give investors diversification because of the way the portfolio is built. And so all these combined are things that we feel may be a good fit for Japanese pensions. PineBridge has a secondaries team. We have a global team. And when we look at secondary opportunities, we really go underneath the hood, so to speak, at a GP, at a general partner level, at a company by company level. And at the end of the day, what you're doing is pricing the risk for each of those opportunities. And so price discovery is really a function of how good your due diligence process is, how good your information is, because at the end of the day, what you end up buying are managers, general partners.